Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we are going to be talking about the 7-month results of investing in TSLY, which is a YieldMax fund. On my journey to building wealth, one of the things that I want to do is produce a side stream of income without using my own money. So what I'm doing is I am using margin to invest in an asset that pays more than the amount that I borrow. So in this strategy, one of the key pillars is to invest in a fund that has a high yield. Okay. So the last 30 days, this TSLY YieldMax fund, which essentially what this does is it sells covered calls on TSLY options. And what they do is they pretty much harvest premium by selling these covered calls. So the 30-day SEC yield, 3.9%. Overall yearly yield, 65%. If I'm borrowing money at 8%, which is the margin rate currently right now, and it's paying out 65% a year, that is a immense yield. And this is an excellent way to build a side stream of income. Okay. So again, on this channel, I'm going to show you what my thought process is here. So currently this is my portfolio value, $178,000. The bulk in the foundation of my portfolio is the TSLY shares I purchased. I own 0 TSLY shares on margin. This is all my own money that I put in over time. And this is the position where I'm borrowing money to build a side stream of income. Okay. So let's go through it. Total market value, $19,799.56. My average cost basis is about $13.82. And my total return is negative $7,500. One of the reasons why this is not performing that well is because TSLY is not performing that well. And usually when TSLY doesn't perform well, it fluctuates aggressively. So in any given week or month, it could be up 20% or down 20%. And that's how we are at right now. Continually scrolling down, expense ratio is 0.99, which is kind of high, but it is an actively managed fund. And the thing that we all care about is how much the distribution was. So on January 9th, I received $1,085.76. At the time, I had 1,951 shares, which paid out 55 cents a share, which ultimately paid me that much money. Okay. A couple other things to think about is let me mention this important thing. A very important factor here is the margin maintenance. Okay. So let's look at the tape here. On January 3rd, I bought another about 10K worth of these shares. So the way that this margin maintenance works is if I borrowed $10,000, the maintenance requirement or reflected on my margin balance is only 25%. So if I borrow $10,000, it only reflects 25%. And I will show you that in my investing profile here. So, we're under the 10% margin use threshold. So very safe. We're not using 40 or 50% of our portfolio in margin. We're only using under 10%, which is fantastic. This again is showing your returns. And you can see in TSLY, again, because I own such a dramatic amount of shares that any given fluctuation, it reflects massive gains or losses. So margin maintenance here. So this is actually very interesting to look at here. So what would happen is if the stock market kept dropping or my TSLY shares kept dropping, my entire portfolio value, if it hits this number and under, then I would be in something called the margin call. So currently right now, we are in a safe zone. So we have plenty of room. You would have to drop 70% for it to actually hit this number. But when I started using the margin, before I bought 10K worth of TSLY again, my margin maintenance was around $81,000. And now it's actually $75,000. So it's kind of weird, but my margin maintenance went down after investing in it. But that's a side note. Alrighty, let's move on. So on my Google Sheets here, I actually need to update a milestone here. So I have some money goals over here. For this option income, I'm kind of at the $100 threshold a month now after all expenses with this income investing strategy, but I don't want to mark it down that I completed it until after I get about a year's worth of data, then I'll adjust it accordingly. But I actually hit over 1,000 subscribers, which is awesome. So appreciate all you guys that are subscribing. So we hit that. Next mark is 2,500. All right, carrying on to the more important stuff, income strategy. So these are the January numbers, which are the things that matter the most. Okay, so January 2024, my total price paid for all the, with margin and some of my own money is $27,041. Margin amount is $19,235, which comes out to about 71% of my portfolio. And then the income that I received was $1,085, which you guys saw on the Robinhood account. And our expenses is $91. And, one of the things I like to preach on this, on my channel is you need to set aside money for taxes, which this is what I'm doing right here. One of the reasons why I do that is because in 2021, I was using margin, but I was selling covered calls on TSLY myself. I overextended myself and I made a decent amount of money, but I wasn't setting aside any money for taxes. And I had to pay about $20,000 out of pocket due to taxes. So don't do that. Set aside the money for taxes. Be smart. Don't be an idiot. Set the money aside for taxes. And then another thing that I preach on this channel is the reinvestment. So there's a lot of calculations that I've ran, and even with your NAV eroding well over 10% a year, currently right now it's a lot more, but that's because Tesla's not performing well, over 10+% a year, with a dividend decreasing 8% a year, you will gain more income as time goes on, as well as your portfolio balance will go up over time. So as long as you reinvest back in 25% of your initial investment, you will continually produce more money. And then in the long run, you will make your portfolio value will increase over time. Okay. And then what I like to calculate here is a net gain. So there's going to be a certain point where once I acquire all these shares that, I'm going to set aside money for taxes. I'm going to keep reinvesting in it. And after the taxes and reinvestment, this would be the amount of money that I can spend on whatever I want. So currently right now, I'm in the accumulation phase. I want to build or acquire as many shares as possible so that I could maybe I want this number to hit 10K a month, which would require a lot more in payments. But if this could hit $10,000, $20,000 a month, that means, I would have money set aside for taxes with the reinvestment, having that side of my portfolio grow, and then I would be able to do whatever I want with it. Right now, I'm reinvesting back into the fund, or I'm just keeping it as cash right now, because if the market keeps dropping, then I'll just wait till the market kind of bottoms out, buy shares at a cheap price, and then it'll go up over time. So this is right now just, either holding cash or buying more shares. Moving down the portfolio, here's some monthly yield. So this payment divided by the price paid, we get about 1.57% monthly yield. So, on the YieldMax, it said 3.9%, but this is after the reinvestment and after taxes, we're about 1.5%, which is pretty solid. And then what I like to do is I like to see how much this money every single month boosts my portfolio. Essentially, this margin that I'm borrowing is money that came out of nowhere. I didn't have to work for it. I just used the fund that I did work for, or, set money aside for, and I'm using that money to build this side stream of income. So what I like to do is I take that number and then, divide it by the actual portfolio value. And then that's how much the portfolio boost you get. So, say you're on par with the market, but you can gain an extra 1 or 2% per year by doing this strategy. That means you're outperforming the market by using the margin. So just an interesting point to think about. Let's look at total here. So, since investing for 7 months, we've been paid out almost $4,000 in payments. Total expenses about $434. So this is the Robinhood Gold as well as the margin maintenance. So the total taxes for 2024 is, this year's $298.43. And then I have $270 set aside for last year. So when I pay my taxes in February, that is where we're at. And then I have a lifetime tax amount. So I just want to see how much I'm paying Uncle Sam throughout the entirety of doing the strategy. And the base reinvestment, I added all these numbers up, and then the net gain after all taxes and reinvestment. So, interesting. So a couple thoughts here. There's a lot of people that'll say this is a really stupid strategy, and probably could be. The only thing is the most important thing is you have to understand what you're owning. And for the most part, I understand. And what you're owning is TSLY. And these covered call strategies, they do the best when the market is going up. My goal here is I want this passive income to beat the market. Right now, it's not beating the market. So can I say that this is a viable strategy moving forward? Who knows? The only way you're going to find out is by actually doing the strategy. So, that's why I'm sharing it on the internet, is to see if this is something that you guys can incorporate into your strategies in a very safe manner and, be like clean, small amounts of margin to boost your portfolio. So, I'm doing it on the internet, so you necessarily don't have to. If you feel that this is a good strategy, you could always do it yourself. But as of right now, I wouldn't be throwing, there was a point I thought about if I just sold my entire portfolio and just bought TSLY, then I would be making a lot of money per month. But the thing is, you don't want to do that. Like, that is such a risky strategy. The actual underlying is always going to outperform more than any covered call strategy, whether it's QYLD, JEPI, JEPQ, the YieldMax funds. Like, there's no covered call fund that will ever beat an underlying that's performing well. Like, that's just not going to happen. But you could always beat the S&P 500, which is the goal. So right now, not beating the S&P 500 wouldn't be throwing all my money into this. I would just be using whatever margin. And then the plan right now is, with this money, this extra money sitting aside, I'm just going to try paying down my margin as fast as possible. And then what my goal is here is, for example, like I had $200,000 in my portfolio. 10% of $200,000 is $20,000. Once I have that $20,000 paid off, I'm not going to borrow more money unless I hit $300,000 in this account, and then I'll borrow 10%. So then technically I would have had $20,000 with the margin that would have been paid off. I borrowed $10,000. So then you're going to have $30,000 of this fund paying off the margin account. And that's how I'm going to snowball my account. But right now, the performance isn't the best, but as long as I'm reinvesting this money, because after a certain point, the shares will reflect the price of, like, for example, a JEPI or JEPQ. And so those are like $50 a share. So as long as we're patient, we're buying shares at these really, really cheap amounts, then it's going to be very fruitful for us. Because then if you're owning, 2,000 or 10,000 shares at $50, that is a massive portfolio that's also bringing you a decent amount of income. So those are my thoughts for now. I'm going to continue doing this, indefinitely, just to show you the performance as well as like how my portfolio is going. But it's really nice seeing these massive payments come in. And I hope you enjoyed the video. I hope, this could be a strategy that we use to, financially set ourselves free and to provide for our families. So I hope you all have a good one, and you take care.